Medicure Limited, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohan John from ICICI Securities. Thank you, and over to you, sir.
Thank you, Michelle. Good afternoon, everyone. On behalf of ICICI Securities, I welcome you all to the Q2 and half year FY23 earnings conference call of Medicure Limited. So we have the senior management of the company with us today, represented by Mr. Himanshu Baid, Managing Director, Mr. Naresh Vijayvargiya, CFO, and Avinash Chandra, Company Secretary. With this, I hand over the call to Mr. Baid for the opening remarks. Over to you, sir.
Thanks, Rohan, and thank you once again, everybody, for joining this call. And I really appreciate your time. I'll take you through the Q2 earnings. And for this particular quarter, as you're aware, the revenue, standalone revenue was around 264 crore, roughly 263.99. And if you look at quarter-on-quarter growth, we were able to do around 10% over quarter-on-quarter growth. That is, if we compare from the quarter of last year to this year, we had a growth of around 24%. So that's a very, good growth, looking at the current situation in the markets. And just to inform all the listeners, the export under current quarter grew by around 22%, and domestic business and growth by around 27%. So both the businesses have done well. As you all know, that exports contribute to around 2/3 of the business, and 1/3 contribution comes from the domestic business. If you look at the H1 to H1 performance, the revenue has grown from around 415 crores to around 503 crores roughly, in that range, and the year-on-year growth is around 21% plus. So our guidance for current FY23, which was for 20% plus growth, I think we are on track to deliver that growth and that guidance. And I'll now take you through some of the significant numbers. So as you all know, that EBITDA margin also increased in the current quarter to around 62 crores. Basically, that was 63 crores roughly, and PAT was 45.22 for the quarter ended September 2022. In the previous quarter, PAT was around 28.8 crores. So there's a significant jump in the PAT numbers. And in terms of EBITDA, I think we have been around 24% EBITDA. So that's a constant number. The current raw material pricing is still, we are still using a material which was procured at higher price, because the normal delivery cycle from booking to consumption is almost 3.5 months. The time we book the raw materials, it comes to the factory, because most of it is imported, and then we always maintain an inventory of around 45 to 60 days. So by the time it's consumed, it's around almost 3.5 months. So now, from November onwards, we started using material which are lower price, which we started buying in August. And we will definitely see an impact in the costing of the products going forward, though there's a slight increase in procurement cost due to exchange rate, but I think that has already been factored in. And we hope that in Q3 and Q4, we will see some impact in terms of improved profitability for most of the products we manufacture. On the currency front, there is no major impact, because 60% to 65% revenue is in US dollar, balance in GBP and Euro, and also some export revenue also in INR. We started exporting to some countries in INR also, and there are also some local exporters who buy in INR and export. So if you look at the currency impact in revenue, it's very minimal, maybe less than 1%. So there is practically no impact of dollar, appreciating against the INR, because other currencies have devaluated. So the net impact is almost negligible. But I think overall, we will see quarter 3, quarter 4 doing better in terms of margin. Freight costs have also started coming down, and we'll see their impact also in quarter 3 and quarter 4. In terms of, if you look at H1 to H1 performance, last year H1 there were some COVID products which we were selling like VTM and some oxygen therapy products, but that revenue is completely off. So that was close to around 15-20 crores. So that is already zero in this current financial year. So if you remove that, the growth is still higher than 20%. But as we have normalized it, so we are at 21% plus right now between H1 to H1 of previous year and this year. On the US FDA front, I think we are in the process of completing the new bioequivalence studies, and reports will be submitted to US FDA by November end. That's the current target. And we are expecting the approval to come in 60 to 90 days. That is, will be our first approval, and hopefully the revenue will start coming in. First orders should start flowing out of the company maybe in the end of quarter 4. We have also appointed a new person in USA, Hayward Poe. He has joined the company on 1st September 2022. He joined as VP Sales and Business Development. And Hayward is also helping us to connect to large customers in the US, and also is helping us to build the business in the US right now. In terms of regulation in India, I think as we are all aware that 1st October 2022, all Class A and B products have been now regulated. And that's very good news for industry, because for a long time we were looking for this to come, and finally government has acted on this and regulated the industry. And Class C and D products, which are more critical, will be regulated by 1st October 2023. But now all medical devices are classified as drugs, and there's a price monitoring by NPPA since 1st April 2020. So that's a big change in the industry which is coming. Also, government is coming with a new medical device and drugs bill, which is going to be, it's called for 2022. The government has already taken industry comments, and they are looking to bring this new bill in the parliament. Hopefully, it is tabled in the winter session, and hopefully maybe early next year, this bill is passed, and the industry will be having a new regulation, which will be more smoother, and medical devices will be having a completely separate chapter. Currently, we are under drugs, but they are denotifying medical device out of the drugs, and there will be a separate chapter to regulate medical devices, which is positive for the industry. In terms of the construction activities at 3 Faridabad plants and Faridabad plants and 1 plant in Jaipur. So due to current pollution situation in Delhi, as you are all aware, in the NCR region, construction activities have been stopped. So that has put some delay in our plans. But as we see right now, Jaipur Mahindra Acetate plant, which was supposed to start sometime in end of this year, will go to early next year, Q4 of FY23. And the Faridabad plant, the EOU plant, is still on track. We are doing final finishing work, so we'll be able to start partial this plant in Q1 of FY23. And 2 other plants in IMT and Sector 56 in Faridabad are slated for Q2 of FY24. We may have few months delay here and there due to current situation and pollution issues, but I think we're on track. We'll be able to partially start some plants at the due date which I announced earlier. So partial operations, but not full, but partial may start on the due dates. On the capex front, in H1 till H1 this current financial year, we invested close to around 100 crores, and we are on track to invest around 175 to 200 crores, as I mentioned earlier. So all this investment is going into new plants, new capex to build the capability. I think in last few months we have seen a lot of traction on India in terms of China Plus One strategy. A lot of companies have got a mandate to move away from China, some of the production. Though it will take some time, but I think Polymed is very well positioned to look at those opportunities. Because as we will have infrastructure, new infrastructure which will be ready, and will we have spare capacity to look at new projects. I think this investment has come at a very appropriate time to help, to really, grab this business, which is opportunity which is coming to India, I think, in the long run. Also, If you look at the PLI scheme, we are on track on the PLI scheme. The investments under PLI schemes are on track. This is the first year of operation of PLI scheme. So in the renal space, we had to invest around close to 15-20 crores, which we've already done. In new capex, new machinery over last 18 months. We have already invested in vitro diagnostic sector, where we are committed to invest around 10 crores every year on plant and machinery, which we're already doing to increase capacity. So all the investments are on track. In terms of growth, already as I mentioned, the things are good. Export markets are still active, though there has been a little bit of crisis in emerging markets. I think for us, there's a little slowdown in Africa and Southeast Asia, but they don't contribute too much to the revenue. So more, as you know, 1/3 revenue comes from Europe, 1/3 from India, and 1/3 from rest of the world. So other markets have done well. So if you look at the current growth in exports in H1 to H1, the growth is almost close to 27%. So there's a very healthy growth in exports, and domestic business H1 to H1, if you see, has grown by around 11%. So domestic business, of course, there was a lot of COVID product sale in that period in the previous year. So if you normalize that, the other products have grown by around 20 to 22%, but in terms of absolute numbers, it's around 11%. So this is the update, and I'm happy to take questions from people on the call, and thank you very much once again for your patience and time.
Thank you. Sir, shall we begin the Q&A session?
Yeah, please, go ahead.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Aditya from HDFC Securities. Please go ahead.
Yeah, hi. Sir, just had a question on Europe. Obviously it's one of your largest markets, and yet you're seeing some sort of a war. So on the one hand, companies are saying it's a Europe plus one opportunity, but on the other hand, there's going to be some demand destruction. So can you just explain how should we look at the bigger picture?
Yeah, I think there's no demand destruction. I think the demand is pretty much intact. And I think because of the current supply chain constraints, there are still constraints, global constraints in supply chain. And specifically when you look at China, most of the companies were so dependent on China on 80 to 90% of their purchases. So that is kind of, a little bit, so most of these companies are looking at India and alternate sources to buy new products. So I think for us, it's a bigger opportunity than what it was probably a year or 2 years ago.
Okay, got it. So near term, you're seeing the orders flow through. There's no problem.
No, there's no problem. Absolutely. In fact, Europe has done the best actually out of the whole lot in the whole, first 6 months.
Okay. Second question is, this medical devices bill is obviously a great initiative by the government, and industry has been lobbying for it.
Yeah.
So, where do you see yourself gaining market share? Is it because I believe there's not much of an unorganized sector? So, whom will you really gain market share from, both for you as well as the Indian medical devices industry?
For us, I'll first take Polymed. So Polymed, I think we are looking at market share from MNC companies. I think today with dollar, we're getting so strong, so a lot of these companies import into India and sell the products. Very few companies are manufacturing in India, at least in our space. So I think for us, that's a bigger opportunity. And I think once we are fully regulated, then, at least see earlier these big companies who say we are regulated, Indian industry is not regulated. So there was a huge gap in terms of perception. But now once we're regulated under the same law, same regulation, then the barrier kind of reduces. And for us, that is the market we are targeting with larger hospitals. Now for the Indian industry, I think it's a similar situation. Earlier, because of unregulation, a lot of these, Chinese products were being flooded into the Indian market with very little oversight on regulation. And you have seen that in the past. I'm not going to talk about this product, but we have seen in the past for, products like thermometers and, pulse oximeters and masks and everything was coming from China completely unregulated. Now, because of regulation, I think the companies who are making in India, will benefit, because then there will be a barometer to judge the quality and there will be a standard to follow. BIS has already made standards for 1400 medical devices, plus medical devices. So people will have to follow standards, and that is part of the regulation.
Got it. Just last question. So, will you introduce new products, or you expect to gain share from your renal portfolio?
I think we're also introducing a lot of new products. So because every year, if you see our website also, we add 6 to 8 new products, and that will continue to happen. And we are already, a lot of new products are in pipeline as we speak. So it is a continuous innovation, continuous development cycle. We'll have to increase the basket as we move on along.
Okay, got it. Thanks. Wish you all the best.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and 1 now. We have the next question from the line of Karan Khanna from Ambit Capital. Please go ahead.
Hi, thanks for the opportunity. So, sir, firstly on your renal business, you've highlighted in your interviews earlier that you plan to grow your renal revenues aggressively in line with your PLI targets.
Correct.
And are receiving good support from the government. So what portion of your renal sales would be coming from government hospitals?
No, so government hospital, we don't have direct sales to government hospital, and renal is still pretty much out of the government business right now. Government has set up dialysis centers, but they're running privately, those dialysis centers. So government support means in terms of policy like PLI scheme, that they have added some duty on the product which were duty free earlier. So that's the support the government is giving for local manufacturing in the country.
Sure.
Not as a direct support in terms of buying the product.
Got it. And in new products segments like renal care itself, how are you able to drive conversion across private hospitals where inhibition regarding Indian products is still present?
I think inhibition of Indian products is present in every segment. It's not only renal; it's in cardiology, it's in infusion, blood, everywhere, neuro, everywhere. But I think as time progresses, where if Indian companies start demonstrating clinical equivalence. See, for example, if a fresenius dialyzer is used 7 times, reused 7 times, if polymer dialyzer can be also reused 7 times, then that is kind of a benchmark, though it should not be reused at all. But the benchmark currently is, because dialysis is kind of like more charitable than, a curative business. So people, say, okay, benchmark, fresenius quality is good because it can be used 7 times. So if our product is also used same time, it's okay, the quality is okay. Or when they are using single use, the factors, the clearing, everything, the endotoxin removability, everything is judged. So I think for Indian companies, it's more clinical equivalence than anything else. If we prove that we are clinically equivalent, that is where we'll see the runway increasing.
Sure. And secondly, if I see your gross margins, say 4-5 years prior to FY22, you'd maintain gross margins of 66 to 68%.
Yeah.
When share of infusion therapy products and your domestic versus export mix was largely stable.
Yeah.
So do you expect to reach those levels? And if so, by when are you expecting to again revert to 66-67% kind of gross margins?
Current, it's very difficult to project the future in that long term in current scenario, because you've seen what's happened in the last 1 or 2 years. But I think our target is to move to high 25s in terms of EBITDA margins. So that is 25 in that range of 25-27%. That is what we are targeting. And if we can go back to that number, that's what our initial internal plan is to do that. And I think if we achieve that number, then the gross margins will come back to that original level already.
Sure. And lastly, on your export business, you highlighted 20% plus YY growth during the quarter. So has there been any significant new wins during the quarter, or is it largely coming from your existing customers?
No, it's coming from existing clients. Mostly 95% plus is existing clients.
Great. Thank you. I'll come back in the queue. Thank you and all.
Thanks, Karan. Thank you.
Thank you. Participants who want to ask a question may please press star and 1 now. We have the next question from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity and good evening, everyone. So first, a clarification on the breakup. When you said export 22% growth and domestic 27% growth, it is on YOY basis, right?
No, this is on quarter-to-quarter basis. Quarter-to-quarter comparison.
Okay, so can you give us, either a contribution or an absolute number, for this quarter as well as for the last quarter, Q1 FY23? And do you give the contribution on the standalone sales or on the consolidated
standalone,
sales?
the numbers are standalone right now. You're right, Rashmi. And
Okay.
already for the year as a whole, we have said around 20% growth. And out of that, exports will be close to 700 crores. That's the whole plan we have disclosed.
700 crores you are talking about?
For the whole financial year.
Okay, for the whole financial year. So basically 15 to 17% is something which we are on track, right?
In terms of export growth?
Yeah, export growth.
No, export will be higher. Actually, last year it was around 575 crores or something. I don't remember the number correctly, but it may be in that number. So if you're touching 700, it will be over 20%.
Okay, sir. And so on domestic also, earlier we guided that, we will be doing around 24 to 25%. So that was something ex-COVID, because in the first half you mentioned that we have done only 11% growth, right?
Yeah, H1 is 11% because last year in quarter one and initial part of quarter two, there was a lot of spike because of respiratory care products and some VTMs and all that, which is already off the table now. It is already not there in this current financial year. Still, we have grown the business by 11%, so that business was taken out and some new things were added. So I think by the time we end the year, we should be between that 22 to 25% growth cycle in domestic business overall.
So 20 to 25% you meant excluding COVID products or including COVID products?
No, this is overall growth. Overall,
yeah,
including everything.
Including COVID products.
Yes, okay, absolute number last year and absolute number this year, that is the growth we are looking at.
Understood, sir. And sir, on your GM, that is gross margins, on quarter also we have seen a contraction. So this was also basically related to the KSM prices, which you mentioned that since you procured on the higher prices, and that's the reason we are seeing quarter-on-quarter contraction also, or it is because of some other reason?
No, I think it is mainly because of the raw material pricing. Because if you see, at peak level, most of the plastic prices were like $1,500 to $2,000 a ton. And now they have dropped to around $1,000 a ton or maybe $1,200 in that range. But as I told you, we have a cycle of 3.5 months. If we really use a material of lower pricing, because we order today, the material is shipped at the end of the month. We get the material. Let's say now, what I'm ordering right now, I'll get the material only in my factory by 15 January. And then we already have a 45 days inventory. So by the time we use it, it is end of February basically. So it's a 3.5 month to 4 month cycle. By the time we get the material, let's say today's current price, for example, now the price have further dropped a little bit, but currency has gone a little bit up. So it kind of normalized, but still it is much lower than it was maybe in the beginning of the year. Still a 40% down than from it was in the beginning of the year.
Understood.
Yeah.
Sir, and about infusion therapy, if you can update, how much was the contribution, to the total sales, or let's say in the export as well as in the domestic market, and what was the kind of growth that we have seen during the quarter? Because I think exports we have done well, and since 80 to 90% of the exports comes from the infusion products only. Yeah. And also on your renal sales contribution, to the total sales, and are we on track of achieving 100 crores in the renal segment as you guided earlier?
Yeah, so we are on track. We don't, we are not sharing revenues division-wise in the half-year period. So I can't, and I don't have the numbers, so I can't share it with you right now. But we are on track because renal will grow towards 100 crore number. That is we are on track with that. And in terms of infusion, you're right, absolutely. 85% contribution from exports comes in the infusion segment, because that's our core business in export, and we have a lot of patents and technology in that area. So we continue to grow in the export market. And overall, if you see in the domestic market, contribution will be around 65%.
So you're talking about infusion therapy to domestic is 65%.
Exactly. And exports will be around 85%.
Understood, sir. And sir, finally, on your dialysis machine installations, how much have you done so far till H1, and what is our expectations for this year as well as for the future?
Yeah, so till September we have totally installed from the beginning till now around 140 machines, and we expect to install around 60 to 70 machines in the current part of the balance part of the year. And next year, we are scaling up already manufacturing. So our target is to sell around close to 500 machines.
500 machines.
Yeah.
And these machines are basically installed across, pan India, or it is related to some particular regions only?
It's pan India. It's gone pan India.
It would be pan India.
It is pan India.
Okay. All right, sir. Thank you. That's it from my side.
Thanks a lot. Thank you.
Thank you. Participants who want to ask a question may please press star and one now. We have the next question from the line of Pankit Shah from Dinero Wealth. Please go ahead.
Hi, sir. Actually, wanted to understand more on the US business part. I think we should start some revenue contribution from the early next year, like quarter 1 FY24.
Yeah.
Can you indicate what would be the size of opportunity and how should we see the ramp up?
See, US, we are still waiting for the US FDA approval, as I mentioned initially in the call. But I think when we see a 3-4 year window, I think definitely for us the opportunity is around $15 to $20 million. So that is pretty much there. And I think that part is pretty much clear to us that once we have the approvals and once we start with one product, more products will follow in the US market. So
initially we'll be starting with infusion therapy, right?
Yeah, that is our core business. So we'll have to start with infusion. And then we'll keep on adding more products, as time progresses. And because once you enter the market with few products, then the customers start. I think there is some traction already building for the US right now. Again, because of this China plus one strategy, and a lot of companies have a mandate to move away from China and look for alternate suppliers. I think we are pretty much placed to really look at some of those opportunities.
Right. And any update on the new R&D center which is planning in
R&D is already there. R&D is already there. The R&D center is already there, and there is nothing new. It was established already in 2017 or something, the new center, and it is still there and is functioning.
So I think we had plans to set up a new center in North Carolina. An investment.
No, yeah, that is correct. So that was planned for during last 1.5 years. But no, we are not going ahead with that. We hired a couple of people, but then we let them go because it was very difficult to work during the COVID period. Travel was not possible, and we could not do much. So we continue to have R&D presence in India only.
Okay. Because if I see over a period of the last 8 quarters, 10 quarters, or 2-3 years, our R&D expense has been in the similar range of 3 to 4 crores.
Yeah. So that is you have to see the cost of hiring engineers, the cost of hiring, let's say, microbiologists or people working in R&D team is much lower compared to the Western world. Western world, the same cost is 10 times sometimes. You can get engineer for $15,000. In America, if you hire engineer, you hire for $150,000. If you want an R&D head in India, maybe you get for $50,000. In the US, it is $300,000. There's a big difference in terms of cost. So I think for us, we are still able to file patents, develop new products. We already have more than 300 patents, so which is currently a testimony to our R&D efforts, what we are doing right now in the organization. And as an Indian medtech company, I think we highest number of patents today.
Right. No, agreed that point. And when we say we introduce new products, so these new products are new to the market, or it's like existing products and we are adding to that product?
Say again, could you repeat that question? Sorry, there was some background noise, I could not get it.
So I'm saying when we say we introduce the new products to the market, these products are like completely new to the market itself, or there are existing products and we are also add to a supplier base?
See, it depends on the category. For example, there could be a product where we come out with an incremental innovation. There will be a product where we come with a completely new device altogether. And it could be sometimes could be a process improvement or design improvement. So there are different categories where you're operating. So let's say in infusion category, we have a very strong portfolio there. So there it is more on new product development focus. In other categories, it could be more focused on incremental innovation or just a change in design and then working on that. So that's how it works basically. It depends on product to product. Very hard to describe you on phone.
Okay. And coming to this dialysis machine, so earlier the original plan was to do like 300-500 machines in 2-3 years. And we'll hit that number this year itself. Is there any? Are we planning to get into any different type of machines where similar
This
things
is
can be
only,
replicated?
one type of machine which is used in hospitals. There are different models and different levels in terms of what the machines can do. So I think we are going and comparing ourselves with the best available product in the market, which is coming from Fresenius in Germany. So we are comparing ourselves with that because today almost 70% installations are done by Fresenius in India. So out of the 40,000 installations in India, almost 70% are Fresenius. So we have to compare with them, and then of course they have a very strong service backup. They have very strong, after sales service. So we'll have to move slowly in that direction and offer similar service, similar, backup, and similar across the country, because we can't say we don't have a service in Bangalore, we don't have spares in Bangalore. So it is a very cumbersome business, but we have seen that for dialysis business to grow, it has to be equipment and consumables. So this is our first foray into equipments. And it is not easy to make a new equipment in India where there is a disadvantage of not finding PCB suppliers or touchscreen suppliers or hardware suppliers. So it has been a journey so far, big journey. But I think we have done that, and I think we are in a good space right now.
Yes, all the best. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants. Anyone who wishes to ask a question may please press star and one now. We have the next question from the line of Pratik Rathi from Armor Capital Advisors. Please go ahead.
Hi, sir. Congratulations on the good set of numbers. Sir, I have a question. We do have a factory, manufacturing unit in China.
Yeah.
And then we have this China plus one policy that we are talking about. What about this China unit there? What's the focus area, and what kind of sales build-up do we see in future from this?
So, Pratik, China contributes to less than 1.5% of our total revenue right now, less than 1.5%. And in the long run, yes, China is more expensive. So it's not a very big plant. So now you can understand from the number, 98.5% India, 1.5% China, if you look at India-China operation. So there's not a much significant operation. And maybe in due course of time, as you see costs going up, maybe we'll have to take a call. But right now it is more strategically being there just to understand new technologies oriented of China, maybe better sourcing, and we're making some critical components there. So that is what is happening in China.
So there won't be any further investments in China?
We've not invested anything significant in the last 4 or 5 years in China.
Okay. And sir, on the dialysis machines part especially, what kind of market do you see, say, once you run your manufacturing unit at full capacity?
So India is close to 3,000 to 4,000 machines a year right now. But I think as everybody talks about dialysis that is under-penetrated today, so maybe in 5 years the market grows to around 6,000 machines or 7,000 machines. That is my current estimate. With dialysis.
What is the number of machines? So for there was
7,000 machines could be a market in per annum, could be in next, let's say 5 years from now. From the current 4,000 number.
Okay. And what's the market price of one machine, what it's going to be?
Margin? No, we haven't, I can't disclose it on the call, sorry.
Okay. And sir, so if on the dialysis machine part, it's only going to be direct sales to the customers, so there won't be any,
It depends on the contracts. See, it is some machines are placed sometimes, some are sold directly. It depends on the contract, how you operate your business. Sometimes you would place the machines, sell the consumables, have a contract for consumables, and then you take out the cost of machine from consumables. It could be anything. It depends from customer to customer how you want to address that.
All right. Thank you, sir. Thank you.
Thank you.
Thank you. We have the next question from the line of Girish Jain from KJMC Capital. Please go ahead.
Yeah, thank you for this opportunity, and congratulations on the good set of numbers, Himanshu. I just wanted to understand the rollout of the plants. In the earlier call, you had mentioned that the Faridabad 4 plant would be operational by this quarter, but now I believe there might be some delay because of the fog issue and the smog issue.
Yeah.
If you could just tell about
so
the
one plant.
Jaipur too.
Yeah. So one plant is coming in Jaipur. So that should be, though it was earlier we had mentioned around quarter 3 end, but I think it will go to quarter 4 sometime. So that is what we see right now. Few months of delay, but we are on track. But partially it will be starting by end of this year. In Faridabad, 2 plants. One plant will start early next year, quarter 1, beginning of quarter 4, quarter 4 ending or quarter 1 next year. So between March and April, this plant should be operational. One plant will be operational in quarter 2, and also Faridabad 56 sector plant will be also operational in quarter 2, the next financial year.
So Faridabad 4 is focusing on infusion products or renal products?
So Faridabad 4 has some diagnostic products there, where we'll be expanding our diagnostic product range. So Faridabad plant 4 is basically for expansion of some diagnostic products.
And Jaipur 2 would be, I believe, for the exports.
Export, exactly, sir. It is in SEZ, so it will be in exports.
Okay, and if you could just give some sense of the cash position of the company from the money which has been raised in the QIP, how much has been used and how much is balanced?
So yeah, absolutely. Giriji, currently we are having maybe a cash balance of close to 300 crores on the balance sheet. And out of QIP proceeds of 400 crores, around 85 crores was used for working capital and retiring some existing loans. And around 250 crores was close to used in capex over last 18-19 months, in that range. So overall, with current cash flows of the company and the QIP money, we are still having a cash balance of close to 300 crores. Nareshji, please correct me if I'm wrong.
Yes, sir, we have 300. The QIP particularly breakup is out of 400. We have done a capex of around 250 crores.
Okay, perfect. So that's what it is, Giriji.
Yeah.
Giriji, any further question on this?
No, thank you so much and all the best.
Thank you, Giriji. Thanks a lot. Thank you, sir.
Thank you. Anyone who wishes to ask a question may please press star and 1 on your touchtone phone. As there are no further questions from the participant, I would now like to hand the conference over to the management for closing comments.
I'd like to thank all the joinees on the call, and I think it was a very interactive participation by everybody. Thanks again, everyone, for your encouragement and support. And definitely, we are on track to deliver the growth we had promised to all our investors and our stakeholders. And look forward to talk to you in quarter 3 once again. Thanks a lot.
Thank you. On behalf of ICICI Securities Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your line.
Thank you, everyone. Thank you.